I had a client where I saved them $3 million in taxes. I was supposed to get a bonus based off of that huge check that the firm got. I got an email from a partner at the firm that said, you get to do this again next year. You need to get a bigger check for us next year. No thank you, no bonus, no nothing on Christmas freaking day. Of course, I'm crying to my husband. He was like, just start a business. You can always get another job.
You did $30,000 your first month, which is insane.
The tax code was written for business owners and real estate investors. There's 7,000 pages in the Internal Revenue Code, and only 12 of them tell you what to pay in taxes. You are entitled to these tax benefits.
I don't feel like I've ever heard anybody talk about that.
That's just one of like thousands of strategies I have up my sleeve.
Barbara, welcome to the Action Academy podcast. How are you?
Good.
I'm excited to have you. So you are a badass in many different directions. So through real estate, through business, and now through tax. So not only are you really good at making money, but you're really good at keeping money, which is the ultimate preservation game. So this was not always the case. So walk us through, who was Barbara before in corporate America, and how did you kind of plan your escape before building this empire?
Yeah, I did public accounting for 10 years, and I was building the corporate ladder. I was doing all the right things. Even in like my master's program, they told you, okay, after 2 years, you're going to be a senior. After 5 years, you're going to be a manager. At 15 years, 1 in 100 of you sitting in this room will ever be a partner at a tax firm. And in my mind, I was like, I'll be that partner. Like there was 100 of us and I was like, it's me.
Yeah.
But I always thought I would be a partner at a firm, not ever start my own business. So similar to you, it was my last year of working for someone else, and I had a client where I saved them $3 million in taxes, and they wrote the biggest check that firm had ever received. The firm had been open since 1969, so like a very long history, and I was supposed to get a bonus based off of that huge check that the firm got. Mm-hmm. And on Christmas Day, 2019, I got an email from a partner at the firm that said, you get to do this again next year. You need to get a bigger check for us next year. No thank you, no bonus, no nothing on Christmas freaking day, 2019. So January 1st, 2020, your tax coach started.
Yeah, it's always out of almost necessity, right? It's just same thing with me. There was no thank you. It was literally, hey man, your performance is dipping a little bit the quarter afterwards. Hey, what's wrong? What's going on? What do you need? I'm like, what? You just took away an $80,000 bonus. What are you talking about, dude? So was this something that you were planning in the background, or was this just like a line in the sand decision that you were like, no more, I'm doing my own thing?
Actually, the idea didn't even come from me. I got that email. So then, of course, I'm crying to my husband. Mm-hmm. And he was like, well, babe, if that client was your client, how much would they have paid you? And I just sat there like, dang it, he's right. They would have paid me the same that they paid that firm. And he's like, so why don't you just start your own business? And I had never even thought of it because it was like so ingrained. Like one, I grew up with parents that worked for the government. So very much like you do the thing, like you get a pension. And then same with college, like you do this, this, and this, and then maybe you'll go up the corporate ladder. So I never had ever been around anyone that owned a business. Mm. So then when my husband was like, then just start a business. You can always get another shitty job, right? Like Gary Vee says. And so I was still scared. So I kept that job. I didn't quit it yet. Mm-hmm. It's just I started a side hustle. Mm-hmm. And that bonus that I was supposed to get was going to pay off my master's program. Long story short, like my master's program, you get an internship. It's a paid internship. And that paid internship is supposed to pay for your master's so you don't have to get student loans. Well, come to find out, both my parents are drug addicts background. And come to find out, my dad was having a 5-year affair on my mom. And so I gave my mom all of that paid internship money to get out of the house. Then I come back on April 16th, right, the day after tax season. And my dad's still living in the house. So they spent it all on drugs. So my bonus was supposed to pay off that master's program. So I started Your Tax Coach to pay off the last like 30 grand of my student loans. And I did that month 1 of opening the business.
It's funny if people would just do the math of how much profit their high salary generates the company, they would be way more confident to go build or buy a business of their own.
Mm-hmm.
Because I did the same math that you did. I was making $250,000 and I said, wait a second. I did $5 million of like annual revenue for you guys. And I make a quarter. I'm like, hold on a second. Like, if I could do that for them, like, can I do that for me? And then even when I had my affiliate business, I was making like 120,000. I think I made 120 to 160,000. That's like 10% cut is a normal, pretty generous affiliate.
Yeah.
I was like, that's like 1.6 million for somebody else. And so everyone is maybe listening to this or watching this, and they're coming up with all these excuses in their head of why they can't be a business owner and why they're just an employee. What's some advice that you could give to them to help them realize their strengths and their skill sets that they already possess today?
I think you have to have a personal brand, honestly. Like, the thing that worked for me from the very beginning was, even when I was in corporate America, I was still documenting on social, like, what I was doing for my clients, even though my clients were really their clients.
Mm-hmm.
But I was, this is what I do in a day. This is how I save people money. Hey, I did this tax strategy for someone. Maybe it'll apply to like any of my friends listening. I literally had no like business owner clients like listening. It was all just like friends and family. And so when I did transition into having my own business, everyone was already used to me kind of sharing all those things. So then just expanding the personal brand of like more social media, more platforms, having a podcast, the marketing piece, I think, is where a lot of people fail, because if someone doesn't know about your business, how can they ever buy from you?
And that's the entire bottleneck between your 0 to your first million.
Mm-hmm.
It's literally just nobody knows about you.
Yeah.
You have to market. You
Mm-hmm.
have to figure out a way. So walk us through the scaling process. So you said you did $30,000 your first month, which is insane.
Mm-hmm.
So how did you go about scaling? What were some roadblocks and kind of milestones that you hit in between?
Yeah, when I was thinking about having an accounting firm, I took everything I hated about accounting over the last 10 years that I have been working it. And I was like, okay, I don't want billable hours. Like, I hated billing for my time.
Mm-hmm.
It always felt icky to me. And clients also never knew what they were going to be billed. So I was like, flat fee for everything. Communication's going to be amazing. And I'm going to bill based on value. Like,
Mm-hmm.
if you pay me $20,000 to save $100,000, would you do it? Yes, anyone would. So those are really like my value propositions. And I also wanted monthly recurring revenue, which is also different for an accounting firm. Like, yes, there's monthly for bookkeeping, but there was never anything for like tax or a tax plan. So
Mm-hmm.
I just started billing my clients monthly and doing as much as I could, like I said, for marketing, like going to BNI groups, which like now I would never do that. But I think when you're first starting, like BNI really helped. And it helps you to like be in front of people if you're not really good at speaking, you
So
know?
it's BNI.
Oh, the Business Network Incorporated or whatever. It's like in your local city, there's one in every city everywhere. And there's multiple chapters in every city, but there can only be one person per industry. So like if there's a chapter that you find, they had to have an accounting seat open.
Mm-hmm.
And then for you, it'd be like a business coach open or something like that. And so then when you go in, it's required that you refer to each other. Like that is, or you're kicked out of the membership, basically.
Got it. That's intense.
So it is. And you have to attend every week. If you miss 2 in a year or a quarter, they kick you out. Like it's very rigid, but also really good for business building.
Yeah.
And I would go to chamber groups. Like I would speak to any group that would listen, and slowly got clients that way. So I think in the beginning, like you just have to have like kind of no boundaries and like willing to do whatever to get your name out there for people to start knowing who you are.
You have to embrace the suck.
Yeah. The first 18 months were so terrible.
Yeah.
Like 20-hour days. Like I'm not exaggerating. At 20-hour days as a mom, it was like awful.
What's advice that you would give to somebody that says, I'm too busy to buy or build my own thing. Like, I need to keep working this job. I'm too busy.
It's just not a priority for you.
Mm.
Like, period, point blank. Whenever I have a coaching client, the first thing I do is I say, show me your calendar and I'll show you what's important to you.
Mm-hmm.
And so there is enough time in the day. It's like, oh, I don't have time to work out. Really? Well, you could get up an hour earlier. Or I have too many kids' sports. Well, you could be multitasking when you're at your kids' sports. Like, I'm still watching while I'm checking emails and I'm, writing down content ideas. Like, you can do so many things with 24 hours in a day, but what's the most important to you?
Yeah. And our secret weapon is my community director, Caitlin, that we talked about on your podcast. 4 kids, 5th on the way. And she does more in an hour than most people do in a week. Mm-hmm. And so I actually tell people that are in the same boat, I'm like, hey, your constraints, how you're viewing them, is that they're the barrier or the roadblock to your success. But I'm actually here to tell you, like, it's the pathway to your success, because you, with your kids and marriage and all of these obligations, I promise that you are better at building systems than I was out of necessity. Mm-hmm. Because I just had my entire calendar wide open and it just absorbed and ate every single ounce of my attention. Mm-hmm. But like people with kids, and I've seen it happen, they go into their businesses and they say, okay, cool. Like non-negotiable, I'm done by 6 because I have to be.
Yeah.
Like my kids, I got to go to soccer practice, so I think it's so important. So walk us through, what were some of the stumbling points that you had when you were scaling this thing?
Working 20 hours a day.
Yep.
So not only was I scared to quit corporate, so I finally quit 6 months later after I was making 10x my salary. Why I waited so long, I don't know. But like, I needed to feel stable enough to do that in my business.
Which is fair.
Yeah. So finally, after 10xing my salary, I quit, but still working the 20 hours a day. And then my next fear was hiring. Mm-hmm. And it was like, who do I hire first? I had no idea. How do I be an employer? Not to mention the legalities of it, but also, do I have enough funding to do it? Never do I ever want to be in a position where I can't pay for my employees' family and life. Like, I don't ever want to be in that position. So it was really hard for me to make my first hire. I did have contractors at first. Like, the first thing I outsourced was social media because it's such a time suck. But I did finally decide to hire one of my contractors full time, and it was an executive assistant. And that was like game changing. I'm like, wait, you can book my travel for me, and you can schedule podcasts, and you can do my scheduling, and you can check my emails. Like, I ripped the delegation Band-Aid off, and then it was like, who can I hire next? So then I slowly built out my tax team. Then I slowly built out my bookkeeping team, and then my operations team and my creative team. So I think delegation is so key, and I wish I would have done it sooner.
Well, yeah, it's like in the beginning, you just don't have the revenue to. Mm-hmm. And now it's like you're to a point where, and like I'm just now entering this point where I only view like 6-figure talent. Mm-hmm. I'm like, okay, cool. What's that position that I can come in that I could pay $100,000 for, which I'm so excited to pay, because that $100,000 is going to yield me millions. Mm-hmm. And like, that's like, employment is like insane. Yeah. It's so much fun. So what's some advice that you can give to somebody that's making their first hire?
Hire slow and fire fast. When I first started, I hired out of necessity. It was like, I cannot go one more day without some help. And so I hired the wrong people. And then once I did hire them, I kept them on too long when they weren't the right fit because of, fear of having to do their tasks again, or what is the team going to think if I fire someone else, or what have you. But it's like, really take your time to build out who it is exactly that you want to have on your team. Like, view it like dating, like have your exact criteria of who you want in a partner, because it really is like your team are your partners. Mm-hmm.
Yeah. So it's hire slow, fire fast. We just experienced that and to a larger degree. And it feels like shit.
Yeah.
And you feel like you're doing something wrong, and you feel like you're broken when you're doing it. You're like,
I hate it every time.
Where did I mess up? Where did I mess up? How did I get this wrong? How did every single person that did an interview with this person on the team get this wrong? And the ultimate answer is that's never going to go away. Even at like corporate executive level positions, you just don't know what you don't know until you're in the process. So that's why that 30, 60, 90-day process exists, to where you're doing your 30-day checkpoint, your 60-day checkpoint, your 90-day checkpoint. And then you're like, oh, wow, you're stealing money from me, and terrible, and genuinely a terrible person. And then you can fire them. And then that's actually hiring working. That's the process working. And that's what a mentor helped me understand. Was he was like, dude, congrats. Fired him within 60 days. Yeah. You're like, good, you caught it. That's the process in motion. So where are we at today with it? So this was back in, walk me through the timeline. So this was back in like 2020?
Yeah, so 2020, I started your tax coach. 21, I hired my first person. And now we have 30 full-time employees in 16 states.
Boom.
Yeah.
Let's freaking go. So walk me through tax strategies. Where do people get taxes wrong from a mindset perspective? And then let's get into some strategies that you help your high net worth clients get that maybe people haven't heard about before.
Yeah, I think tax mindset is like, the tax code was written for business owners and real estate investors. Like, there's 7,000 pages in the Internal Revenue Code, and only 12 of them tell you what to pay in taxes. The other 6,980 tell you how to get out of them through being a business owner or real estate investor.
Literally.
So you are entitled to these tax benefits.
So what are some strategies that you see people do that are like you guys do for your clients that you've seen work the best? What maybe give like some entry level 101 strategies, and then going up to some crazy, maybe unique ones that we haven't heard of? Because I think a lot of us have heard like doing the 1031 exchange, or like a cost segregation, or accelerated bonus depreciation. Maybe we can still hit on those for people that are brand new and maybe aren't familiar with the terms too.
So you want them for real estate investors?
Let's start with real estate first, and then I'm really curious about advice for people because I sold my portfolio. So I'm just eating my taxes right now.
Yeah.
So I need help too. So first we'll help the investors.
Yeah. So typical ones, like you mentioned, 1031 exchanges, right? You can not pay anything in tax on any time you sell an investment property. You can do that forever until you die. And I think this one's really crucial because people do 1031s throughout their life. And then all of us have probably heard of a friend's parents, because it's not my parents and probably not your parents, that are going to, retire with a bunch of properties. But maybe our friends' parents who are now 70, 75, they're getting too old, and they're like, I don't want to deal with this real estate portfolio anymore, so I'm going to sell it, or I'm going to give it to my kids. Like, never, ever let your parents give you a rental property before they die.
Because now you don't have the stepped up basis, and now you're going to pay the estate tax.
Exactly. So that triggers a taxable event when they gift it to you. And like you're saying, the property could be worth millions of dollars more than what they purchased it for. And you wouldn't get that unless you get it when they pass. So let's say they bought it for $100,000, and then when they pass away, it's worth $1 million. Well, you would get it for $1 million the day they passed, and you could sell it that day for absolutely no tax. So that one's really important. I really like, a lot of people talk about 1031s, but I call it like the reverse 1031, or the slow man's 1031, or slow woman's 1031, where like it's not even through a 1031 transaction. It's outside of it, but it's in the same year.
Okay.
So, for example, you mentioned you sold your portfolio. Maybe it was in 25, I hope. And so we have the rest of 2025 to figure out how we're going to lower your taxes. And it's not always real estate that will do that. But let's say we have from now till the end of 25 to find you another real estate portfolio that maybe takes less time from you, makes you more money. But the perk of it is now you bought a new portfolio, you can redepreciate everything. So then you just recost seg that new portfolio and offset your taxes. One that I think you'd really like, because you like to buy businesses too.
Go on.
This is called the self-rental election. And I don't mean like the Augusta rule, but the self-rental election means, I'll use this as an example. We're in my podcast studio right now, in one of the offices that I own. If you own an office or building or warehouse or whatever, in the same percentage that you own the business that it's housing. So let's say, for example, if I owned your tax coach 100%, I would have to own this building 100%. But for tax purposes, as long as you make this election, the IRS says it's 1 unit. So the cost seg on this property, which gave me like a $300,000 loss, offset my YTC, my Your Tax Coach income by $300,000. I did not have to be a real estate professional.
Okay, what the hell? Wait, what? All right, walk me back.
Yeah.
So
let's say you own a HVAC company.
Okay.
25%. So you own it a quarter. You have 3 other partners.
Got it.
You guys could buy an office or a building, or my favorite's commercial residential like this in places that I like to visit. So Scottsdale is one of them, Miami, New York, California. You can do it all over. Find somewhere you like to travel to and buy a commercial residential. So when you're in those cool places, you can also stay. So like upstairs from here, I can stay as long as I'm here for business, which I am because we're recording a podcast. Okay.
Stock me on it.
So you and your 3 partners of the HVAC company go in the same percentage on a building or a place like this. And now you can make the self-rental election where it's all now one. So say $1 million condo in Miami, you do a cost seg on it, it gives you $400,000 of depreciation. That $400K will offset your business income by $400K.
Damn. Okay.
And then just keep doing it.
I just keep buying new offices?
Yeah. In places where you can do business. So for you, you have members all over the US, probably all over the world, but you know, find hubs where there's a lot of your people, probably Dallas.
Yeah.
Denver, Seattle,
Atlanta, probably like Tennessee, Florida, and here.
Yeah. So let's say this year you're like, okay, I want it in Scottsdale and Miami. So just own it the same percentage. Maybe it's Action Academy that you want it. So if it's 100% you, then buy the building at 100%. Or if it's 90-10, the other person will have to come in. That's the only downside, is it has to be the same percentage.
What if it's phantom equity?
Well, if it's not on paper.
It's not on paper, so it's phantom. So it'd be just me having 100%.
It has to match your tax returns.
Okay, cool. So it has to be me 100%. Got it. So when you say commercial residential, like did you own this unit? Do you own like the entire building? Like how does that work?
So for this building in particular, I own this unit.
Okay.
But it's commercial residential, meaning it's zoned for both. I could live here or work here or both.
Okay, how does that work? I actually have not heard of that for some reason.
Commercial residential, there's a lot of them. And now that I say it, you'll probably notice. So an example would be go to Old Town Scottsdale.
Okay.
All the businesses are downstairs and there's always a unit upstairs. That's commercial residential.
Okay. Yeah, that makes sense. I see that a lot in Europe, but I don't feel like I've ever heard anybody talk about that.
You're welcome.
So there we go.
That's just one of like thousands of strategies I have up my sleeve.
Well, keep on going. Thank God we got a podcast, because right now, and I'll like be honest with my strategies, and you've kind of changed my mind already, but I just don't like investing in most real estate. I just don't want to. I talk to all the real estate investors. I like it. It's cool. But it's just from a return perspective, it doesn't wet my whistle, because I love putting all my disposable cash back into businesses.
Yeah.
Because they make me more cash. But then my accountant and my tax team yelled at me, and they're like, hey, you don't need any more cash flow. Like, go buy something else. And I can't mentally bring myself to do that. But I need to make the pivot. So what's some advice for me or some business owners that are profitable and multi-millions of dollars, and we got to figure out something? Because it's either I need to go buy the short-term rental, which I was in the process of doing last year, and I just said, fuck this. Like, I don't want to. Like, I don't want to go through the process of doing all of this stuff. I don't want the freaking short-term rental. I just want to focus on my business and, like, grow my business. That's it. And so I didn't do it. But then I paid 37% tax, and I don't like that.
Yeah, the first thing I would ask is, like, what is your time worth? And, like,
But that's why I didn't do it, because I'm like, this is a waste of my time.
Yeah, sometimes, like, you don't do everything for taxes, you know? Like, at the end of last year, I needed, quote unquote, to buy another piece of property, but I didn't, because I was like, it's freaking December. I'm tired. It's the holidays. I'll just write the
Exactly.
check. And sometimes that's okay. Like,
Yeah.
it's not always going to work out timing wise, but there's still other things you can do. One, I would say, are you calculating your ROI correctly on rental properties? Because it's not just the $200 a month in cash flow.
No,
that
I
you're
don't
getting.
care about that anymore. Like, we have people that are doing all types of commercial. It's just, I don't like. So, for instance, an example of this would be if I have $500,000 in cash.
Mhm.
I'm going to put that $500,000 into buying cash flowing small businesses because I can get like a 30% minimum cash on cash return on that, like day one.
Mhm.
Like, I don't have to put that into a syndication where I'm going to get an 8% pref and then a freaking 2x equity multiple in 5 years. Like, that sounds freaking terrible to me. I'm not going to do it.
Yeah. Then for you, it's like you're out earning the tax problem anyway. So as long as you're fine with paying the 37%, cool. But also, you could invest in other things besides real estate. So you could throw it into oil and gas.
Yeah, tell me more of these. I like this too.
So you can get 85 to 90% as a deduction in oil and gas the year you do it. So let's say that $500K that you have to deploy, you put 100,000 of it in oil and gas, you immediately get a $90,000 deduction on your tax return, and hopefully it hits oil, and you'll also make cash flow as well. So you're getting the big upfront deduction more than typically real estate, because real estate you're getting like 40% through the cost seg. So oil and gas you're getting more, and hopefully you hit gas or oil. And there's oil and gas companies out there where you're only investing in already producing oil rigs anyway, so it's kind of like guaranteed. Nothing's guaranteed, but better chance of making more money. So oil and gas is one. Also, I'm a big fan of people having their own charities. Like, there's so many ways for you to save money in taxes through charitable deductions, through your own private foundations and things like that. So at the end of the year, let's say you have $500K of profit you want to get rid of. You have your own private foundation that you throw it into. You get the $500,000 deduction today, and you haven't really donated any of it yet because you haven't figured out what to do with it. And that's okay. The IRS allows you to. You just have to give 5% a year away to an actual 501c3. So let's say in December you throw $500K into your private foundation. You'd have to give $25,000 of it to a charity
St.
of your
Jude
choice.
or something.
Yeah. The cool thing with your private foundation is now there's $475,000 in it. You could invest it in real estate. So if you wanted to, so that money is going to grow.
And I'm not anti-real estate. I still like real estate. It's just from a time perspective and an attention perspective. Yeah. So like for me, we'll probably do like some commercial properties as like JVs. And then again, like I'm partner on development, which is going to be more of the syndication model. But I just like, the reason I built my business was so that I could have my attention where I wanted it to be. Like, that's the primary reason I did it. And then all of a sudden I found myself playing this tax game where I'm like, wait, hold on a second. Now I'm doing all these things I don't want to do, which was the opposite of the point of me building the business.
Yeah.
So, I mean,
the bummer with taxes is if you want to keep control of any of your money, you'll be taxed on it. If you deploy it into investments, then you won't be taxed on it. But I'm sure there is somewhere in the U.S. where you would want to visit and have a short-term rental. Like, for me, my next one I'm trying to find is New York City. I'll be there all of June trying to find my next property. And it'll be a short-term rental when I'm not there, which will be most of the time. I'll get the big cost seg. The Airbnb will offset the cost of it, so it's not costing me anything, and it's helping me tax-wise, and it's in a city I'd want to visit. It's the people that are buying short-term rentals in Alabama. No offense to Alabama. I don't want to visit there.
No, I don't think anyone does. I don't trust the person that wants to visit Alabama.
Yeah. So maybe they're really into football or something. So my thing is, like, don't buy real estate in places you don't want to go visit yourself.
That's fair. Yeah, because we're about to start investing in like some crazy properties to like host retreats at. So that's what we're looking at right now, is like boutique properties, hotels, and then also like resorts, stuff like that. So that's going to be our play. I can't buy a vehicle to deduct because we're an online
Oh my
company.
Lanta.
So there's nowhere that you can
Wow.
say in an audit that you're actually driving to in Austin.
Do you drive to the airport?
I do.
That's business mileage.
Mm-hmm.
Do you drive to go get supplies for your office? Yes. Do you drive to the post office ever? Yes. Like, are you driving to Costco to get your home office snacks? Because you can do that as a business.
Mm-hmm.
Yes. Like, you're driving for business.
Mm-hmm. So I can do it. I can deduct it.
Yes.
Yeah. I was like, why the fuck am I not able to deduct a car this year? So like last year we had all this profit sitting. I was like, why can't we deduct a car?
Yeah.
Like, what are we talking about?
You totally can. You want to make sure it's 50% or more used for business. So if you're like, well, I drive to the gym, okay, we'll have a business meeting at the gym.
Mm-hmm.
Use the gym's Wi-Fi for business.
Mm-hmm. Done. And then you just have to log it, right?
Yeah.
Yeah. Easy. Okay.
And then make sure the car is over 6,000 pounds is like the best way to deduct it. If you want to buy a sports car, because I saw you in a Ferrari.
It's a rental, guys.
Then those you want to lease.
Yeah. Yeah, that makes sense because I was trying to see if I actually was a car guy. I was like, yeah, let's give it a shot.
I bought the cool cars and like all the cool like fancy things, and like they don't do anything for me.
What does it for you?
Travel.
Me too.
Yeah.
Like I just like the things just collect dust. Like my entire condo complex is all literally just Ferraris with covers on and Lamborghinis because they just leave them there because they're off traveling and doing other stuff.
But it's so funny because so many people that aspire to hit the next goal or like the 10K months or the $1 million years, it's to like buy the thing that they've always wanted. But then you buy the thing and you're like, that's not really what I wanted. I wanted the time, but then your time's been replaced by your business. So it's like this weird limbo place. And then you realize all you want in life is time and experiences.
Period. Because if you have a yacht, I mean, I've experienced it myself, where I was just like, and that's why even like the idea of being the like the single dude, the single multi-millionaire in your 40s with no kids, like that's awful. Like I want to have kids and like get married and all of that because I've traveled to like the nicest places by myself.
Yeah.
I'm like, wow, this fucking sucks. Like I would much rather have somebody with me or like
well, and let me tell you, traveling with kids is like the best. Everyone talks about
hold on. This is a hot take.
Everyone talks about how hard it is to travel with kids. That's bullshit. It's because you've never traveled with them. So like my kids have always traveled. So now they know airplane etiquette. Like they know when we're in a new country, like you have to adapt to their culture. Like they know when we're in Paris that you need to say bonjour when you walk into a place where they think you're fucking rude.
Yeah, they're gonna punch you in the face.
Yeah, like, and so your kids just have to know these things. They need the experience. They need the cultures, and they will know how to travel, and it'll be so much easier.
Just from the beginning, just like having them around noise.
Yep.
Then they'll just be able to sleep through it.
Yeah.
That makes sense. Oh my God, that's cool. So what else? I'm gonna get the freaking car then. I'm gonna get the oil and gas. What else do we got?
You're gonna get some self rentals.
Gonna get some self rentals at Airbnb or two this year. I am gonna invest some into some syndications, but here's my my issue is for me and like all the tax prep we were doing last year, it was like, okay, cool. So I could take these passive losses, but that's only for passive income. Like we couldn't take the passive losses onto my active income. Mm-hmm. So like, how do I do that?
Because you weren't a real estate professional.
Because I wasn't a real estate professional. So it's just basically either stop bitching or buy real estate.
Or marry a real estate professional. Stay-at-home mom.
So dream. That's the dream. Especially if you speak Spanish.
Okay, so we're looking for a Spanish-speaking stay-at-home mom or willing to be a stay-at-home mom.
That wants to travel the world.
And spend 750 hours a year in real estate and more than anything else. We'll look for that.
Hard.
We'll look for that. Yeah, so for the passive losses, you would have to have some kind of other passive income.
Yeah.
So we call them PIGs, passive income generators. Mm-hmm. Can you be a passive investor on any of your businesses?
I'm a passive investor on all the businesses.
Then they can all offset your passive losses.
Mm-hmm.
It just has to be classified as a PIG on your tax return.
How do you classify as a PIG?
it's literally just a checkbox that says that you're active or passive. And I bet they marked you as active.
Something to think about.
Show me your tax returns and I'll show you.
Yeah, sounds good.
So for a lot of our clients that have passive activity losses like real estate, those are called PALs, passive activity losses. You need pigs to go with your PALs. So oftentimes the pigs are going to be franchises. Like a lot of our clients will invest in franchises because you're not really like active in there.
Yeah.
Or like what you're doing, you're buying up businesses, not necessarily a franchise, but just any business.
We're buying franchises too.
So yeah, all of those can offset. But from the beginning, you have to be classified as passive. So if you've been marked active on those before,
we'll figure it out this year.
Yeah.
But okay, cool. So
and then when you're structuring these business buying, like, have you heard of the qualified small business stock election?
I've heard about that in the context of a founder starting up a company and then exiting it.
Yeah. So you could structure it. You'll need to restructure when you're buying the company, whether it's an asset sale or stock sale. But a lot of business owners can qualify for the small business stock election, where every owner can exclude up to $10 million at sale. So if there's 5 business owners and you sell for $50 million, it would all be tax-free.
Okay.
Yeah.
Cool.
As long as we can qualify you from the beginning. We need a 5-year runway is the biggest thing. So you had to have originally issued stock for 5 years. So you buy a business today.
Yeah.
We would need at least 5 years before you sell.
Okay. Cool. No, that makes sense. Oh my God. So through all this process, like, so you built this up, scaled this, like, my honest question is, how the hell do you find time to do the 700 units that you guys have while you're scaling the business? Because I scale my business and I'm like, there's nothing else I can even remotely attempt to focus on building, let alone like anything outside of this business.
Yeah, keep delegating. So like anything that's less than my hourly rate, which my hourly rate is $3,000. So basically anything is less than my hourly rate, I delegate out. So like a house manager, a chef, nannies, like any of that, to where like you can focus on being present with your family, present with your kids, and scaling your business. I outsource all of it. And then in terms of the rentals, like my husband's my rep. So yes, you have to marry a real estate professional, Spanish speaking, preferably. And still you can have people that help you in your real estate portfolio. You just have to spend more time than they do. So like some hacks with that, you know, you're supposed to spend 100 hours a year and more than anything else on your properties. Is like when we're remodeling a property, for example, we totally gutted this place and redid it. I tell my contractor, you have to swap out your subs every 99 hours so that I or my husband spends 100 hours or more. So just little like tricks like that.
See, yeah. Okay, cool. So I just need to suck it up and do it.
Delegate more.
So
you have more freedom and time.
Cool. So who is your target client for what you guys do? Because somebody's maybe listening to this, myself included, and we're like, okay, tell me more about what you offer and like who you guys are.
Yeah. So everyone comes to us for tax strategy. And typically you want to be a business owner bringing in $250K or more for strategy. But if you're below that, like everyone knows me for the Write Off Your Life course. So I literally show you thousands of deductions that you could be taking in your business through the course. And for our real estate investors, obviously we can help you with strategy as well, but also we do cost segs. So if you're needing a cost seg study on a new property, basically anything and everything for your tax savings.
Beautiful.
You got it.
So if people want to find out more, they want to partner with you, they want to work with you, where can they go?
Yeah, just DM me on Instagram. It's me on Instagram at Your Tax Coach. That's the one thing I won't delegate out, is responding to my people in my community. So if you have a tax question, feel free to reach out.
Beautiful. So guys, we're going to have that in the show description, and you can go and find out all the information that you need, and be sure to follow her on Instagram as well as the show. So guys, thank you so much. It's been Brian and Barbara with the Action Academy podcast, signing off.